Welcome to the Wealth Academy. In this video, we will discuss manipulation. So let's begin. So, in order to become a better trader, you need to understand market structure. That is the daily cycle structure as well as the weekly cycle structure on when to know when the market is going to reverse. So that way you can trade with the market maker instead of the retail traders and getting stomped out. So how to identify the manipulation? Because the manipulation is the induction that's going on, the inducing of retail traders to manipulate them on making them thinking the market's going to go up, and ideally it's going to drop. So how do we identify this manipulation? That way we can catch the moves. So to better understand it, we need to know this weekly cycle structure. And what do we teach at the weekly cycle structure in generational wealth? We focus on what? The days of the week. Monday, Tuesday, Wednesday, Thursday, and Friday. So we focus on the weekly structure on seeing a certain trend forming starting out the week when the market opens Sunday, Monday, and then expecting it to do what we call a midweek reversal on Wednesday or Thursday. So if we're familiar with this structure that's starting to play out over and over, the same algorithm over and over due to us backtesting this and seeing it ourselves, then it starts to become easier for us to identify. So now once you understand the weekly structure for such, Monday is right here. Sunday, Monday. Market opens up right here. Right at the session rate. Okay. What does it do? It creates the low. It creates a high Sunday, Monday. What else does it do? Now, the reason we don't trade, or I in particular don't trade on Sunday, Monday, is because the market just opened. It needs time to do what it's going to do to set that trend, to do the manipulation, to make the manipulation move. So a manipulation is to make you think, like I said, it's going in one direction and the market maker is going to reverse it. So the market opens Sunday, Monday. It creates that high. It creates the low. What happens on Tuesday? It creates a higher high and a higher low, right? So now at this point, when we see that, what do the retail traders know when it does that? That means it's trending. We now have a trending market when it's starting to create that. So now we can place our trend lines, right? We can place our trend lines. So after we place our trend lines, now we see the market is starting to move up because we got these 2 points. We got these points, because we already identified Sunday, Monday high, Sunday, Monday low. Now we got Tuesday's new high, Tuesday's new low. Of course, it's trending. So what do we expect on Wednesday? Market structure tells us if it comes to this high of Tuesday, what you did, that's going to reverse, right? That's what the market structure, the weekly cycle structure tells us. Now, the manipulation is uptrend because retail traders are taught to buy the uptrend, right? They're taught to buy on this uptrend. Also, what else are the retail traders manipulated and induced on? Let's see. First, it did 3 touches to the trend line. Now, remember, like I tell everyone this all the time, these trend lines, these drawing tools we place on the chart does not exist in the Forex market. So retail traders and a lot of traders get so attached to these trend lines that we place on these charts and expect that the price will always have to come up here and will always come down to the bottom of the trend line before they buy and sell, etc. That's not always the case. Remember, we're just placing these drawing tools on there to identify the manipulation. We're not trading these trend lines like the retail traders are taught, because that's what they're doing. Because they're looking for what? The 3 touches. 1, 2, 3 touches. Look, 1, 2. This is the 3rd touch. You know how many? You know how much? Right here was a lot of liquidity already because of this trend line. There was so much liquidity because the 3rd touch tells retail traders that this is a trend. This is a strong trend. This is what so many retail traders got stumped out here because they started buying. They started buying. So they all got stumped out here because they started buying that trend line because they was expecting for it to continue up, to go to the upside, because they're taught that an uptrend, trending market, making higher highs, higher lows. Why would you sell against that? But the weekly cycle structure tells us that this is, of course, most certainly Monday, Sunday, Monday opens. Tuesday is still creating that high. Wednesday, now we're looking for a midweek reversal. Wednesday, Thursday. So, I mean, we know the weekly cycle structure. The manipulation is here, guys. This is the manipulation. Sunday, Monday, Tuesday, bringing it up to a Wednesday to reverse it. So you want to look for the manipulation within the weekly cycle structure. Which direction is Sunday, Monday, Tuesday sometimes bringing it up to? Because now remember, Tuesday we can get an early midweek reversal based on the pair and the trend is in. So remember, Sunday, Monday, Tuesday is creating that trend. You have to find which direction that is, and you buy with that or sell with that. Wednesday, Thursday come, you know what that means. So at this point, for example, we know Monday, when we see this trend line going on Tuesday, we need to be looking for buys because we want to go with this trend, the market maker. And now we know the market maker is going to shift it, so we need to be looking for sales. Make sense? We have to trade with the market maker. That's all we're doing. We see the manipulation. We know the manipulation based on all the nonsense we were taught as a retail trader. Always look for the manipulation within the market. Now, we're not going to always get that perfect trend line. I mean, that perfect daily or weekly cycle structure, we're not going to always get it. We're not going to always get it. But the market will make its moves where it always tends to reverse on these Wednesdays and Thursdays. Look, Thursdays. Shut up. The manipulation was to the downside, of course. Why? Because of this. All this strong move to the downside. Retail traders look for that. So you have to find a manipulation. You do that due to back testing.